C3 AI shareholders took a strong hit yesterday after the CEO of the company decided to announce preliminary earnings results. What it basically means is that the management of the company realized they're not gonna make their previous guidance on the next earnings, which are about a month from now, and decided to step up and to give a new guidance. Besides the adjusted guidance, the CEO said that they're having a major leadership switch in sales, and he also said that they're looking for his successor for the role of the CEO. Hey there and welcome to the Market Monkeys channel. It's Julia here, and today I want to discuss whether this whole sell-off that happened yesterday was justified. The stock dropped more than 25% after the news, and if it wasn't justified, is it a good time to buy the stock of this company? Let me start with the numbers so you'll understand what we're talking about throughout this video. So first of all, the CEO of the company gave a new guidance for Q1 2026. I remind you, the company is already in 2026, so this is their first quarter. And he said that he now expects an actual Q1 2026 revenue to be at around $70 million, which is bad because this is a miss of more than 30% from the previous guidance that the company gave in Q4 2025. As you can see, a previous guidance range was of $100 million to $109 million. Besides this epic revenue drop, they will have much higher loss from operations at around $57 million. The problem is that previously they expected this number to be between $23.5 to $33.5 million. So this is roughly double from what was expected on the better end. Basically, right now we have no way of knowing this drop is a one-time thing or will it happen again. The CEO of the company just said that they had a horrible Q1, and this is a result of the fact that they had a weak sales team and that he was sick, he was taking care of his health. Actually, in my previous video that I made just a couple of weeks ago, I stated a couple of things about the revenue, and I actually raised some concerns about the fact that they might not get to the same revenue level that they did before. If you find this information timely, interesting, don't forget to support this channel by pressing the like button and subscribing. Now, let me explain my concerns from the previous video, which you will be able to find somewhere here, and you can go and check it out later. These things will give you a better understanding of what had been going on, and you will see that basically it's not surprising that the management had cut the revenue. My first concern from that video was that even though the revenue of this company was impressive the last quarter and the company had actually made a very strong beat, the problem was that the subscription revenue did not grow even close to the actual revenue growth, and this is a red flag. Because first of all, for software company, subscription revenue, this is something that usually helps the company to beat their results, because they know for sure that they have some chunk, right, some part of the revenues that they will see this quarter and next quarter and quarter after that. And on top of that, they can make estimations of how much more clients they will bring in, and as a result, they can set expectations and beat them easily. And in my previous video, I said that this is not the case of C3 AI, and now we see exactly that. Besides that, another major red flag about the previous earnings, which I remind you again were great, is that a very big part of that revenue growth came from demos. Basically, a trial versions that companies bought in order to understand they want or do not want to use C3 AI's product. Of course, if those demo clients were transforming into subscribers, into subscription revenue, this would be perfect, but this is definitely not something to rely on. Besides this, I mentioned that this company has a really weak sales team, and this is a known issue of C3 AI because basically this company heavily relies on its partners to sell this product to their customers, to customers of their customers. And I have to say, this is a very weak sales strategy, especially if we take into account that they're a direct competitor of Palantir. And Palantir is basically known for having the best sales strategy there is for software companies, their boot camps. So this was a major red flag as well. And now we see that the CEO actually addressed this issue, and he basically blamed the sales team for the weak Q1. Here you can see his quote from the website. He said the good news is that they have completely restructured the sales, which is, well, probably it is a good news, but we have no way of knowing how the sales team will be working and what results they will be showing, and it definitely won't show itself the next quarter. It won't show itself in Q2 or maybe even in Q3. When you change the whole department in your company, it takes time for people to adjust. It takes time for them to develop some strategies and to actually implement them. Where did you see a new company, a startup that starts operating perfectly in the first year? Usually it takes years, so the same for the department, maybe not years, but it will take some time. Here he said that sales results were completely unacceptable, and he said that there are two factors for this. So here you can see the first one is what I just mentioned, that reorganization with new leadership had a disruptive effect. Well, it usually happens like this. And after he said that due to his hospitalization and vision issues, he had no way of impacting the sales, and that the sales wasn't as productive without him as he assumed they would be. And after that he said that now he's feeling strong and fully engaged, but he also said that they're looking for his successor. I have a couple of issues with his statement. First of all, I already said that on the last quarter it was evident that the company might have problems with revenues. So I'm not sure if you can entirely blame the sales team for this. The fact that people are taking demos but they're not transferring into recurring subscription revenue is a red flag. Besides this, he did not say a word about how they will be fixing the subscription revenue. He did not explain how the new sales team plans to address the sales issue. And the major red flag that you have to take into account is that he did not fix the guidance for the full year of 2026. And this is probably the biggest elephant in the room right now about C3 AI. Because previously on Q4 2025, they gave a very optimistic guidance for the revenue in 2026, and they said that it will be almost $500 million. Now, as we see, the company has only 70 million for the quarter, for the first quarter, and no way of knowing whether it will be better on the next quarters. And actually, by how it looks right now, probably it won't. So in my opinion, the company will be forced to fix their revenue guidance for the full year. And if so, if it really happens, it will be a major negative catalyst for the stock of this company once again. Now, let's quickly calculate forward price to sales ratio in order to see what is going on with the valuation of this company if the revenue will be lower than expected for the full year. So basically, if we take $70 million per quarter, let's say they will be making a few million more each quarter, let's say they will get to $300 million for the full year. If so, if we take the market cap of the company, which is about $3 billion, and divided by the revenue we expect this company to make in 2026, we get that forward price to sales ratio is about 10, which is actually much higher than it was even before the stock dropped. Of course, this is a negative, pretty much negative prediction, because maybe the company pulls off something and they're not making 300 million, but after all, maybe they will make 400 or maybe even more, who knows. But this is something that you must take into consideration, that after the whole news came out and after we re-rated the stock, it looks even more expensive than it was before the drop, just take it into account. So as you can realize, I won't be buying the stock of this company right now. In my opinion, it's a suicide buying it before the earnings, because we have no way of knowing this revenue problem is a one-time thing or maybe it will continue for the rest of the year. And I would definitely recommend to everyone I know to wait for after the earnings to get the most new and the freshest information, and just after this to make up your mind. I remind you that I have a Seeking Alpha page where I break down all of the hottest stocks of the market, so you are welcomed there. If you don't have a subscription for Seeking Alpha, we have affiliate links. If you wanted to make an account there, you can find the discount in the pinned comment section. Besides that, please don't forget to write your comments, support this channel by pressing a like button and subscribing. See you in the next time. Happy investing!